If you're hunting for a mortgage in 2025, it's easy to feel lost. You have the big six banks, local credit unions, and a sea of online lenders all claiming they have the best deal for you. But who can you really trust with your biggest financial commitment? The truth is, the best lender is rarely the one you expect. We've done the homework, analyzing rates, hidden fees, and the fine print to give you a clear picture of who's on top. By the end of this video, you will know exactly which lenders can save you the most money and why your own bank might not be telling you the whole story. My name is Jyoti Shamnani, and as a real estate agent, I see my clients wrestle with this exact problem every day. What was a great deal last year isn't necessarily a good choice today. That's why we are ranking the top mortgage providers from worst to first to see who really comes out on top this year. We are not just looking at the flashy advertised rate. We are looking at the whole package. Prepayment options, penalty clauses, and the kind of flexibility that can save you thousands. First, let's set the stage. The mortgage rate environment in 2025 is in a really interesting place. The Bank of Canada did make a series of rate cuts through late 2024 and early 2025, which helped bring variable rates down. However, as of September 2025, the bank has held its key rate at 2.75% for 3 announcements in a row, signaling caution due to stubborn inflation. The previous expectation that rates would just keep falling has become much less certain. Meanwhile, fixed rates, which are tied to government bond yields, have dropped from their peaks but haven't fallen as steeply. This creates a critical choice for you as a borrower. Do you lock in the security of a fixed rate, or do you take a chance on a variable rate, hoping the Bank of Canada resumes cutting later? There is no single right answer, but a great lender will give you competitive options for both. An even better one offers the flexibility to switch if the market or your personal situation changes. Keep that in mind as we go through our list. All right, let's start our ranking. Kicking things off at the bottom of our list for 2025 are two Canada's largest banks, Scotiabank and TD Bank. Now, to be clear, these aren't bad banks. They are stable institutions that millions of Canadians rely on. But when we focus on just their mortgage offerings right now, they are not quite keeping up with the competition. Let's start with Scotiabank. While their fixed rates are decent, they aren't leading the market. For variable rates, it's difficult to compare directly because Scotiabank doesn't publicly post its discounted rates, which makes it harder for you to shop around and know if you're getting a good deal. While they are known for great products like their STEP home equity line of credit, on a straightforward mortgage comparison to 2025, they are lagging. Next up is TD Bank. TD is a banking giant, but a couple of things hold it back in the mortgage race. First, their discounted fixed rates have been consistently just a bit higher than their main competitors. A difference of 0.1% or 0.2% may not sound like a lot, but on a large mortgage, it can add up to thousands in extra interest over year term. As of September 2025, their mortgage prime rate is in line with the other banks, but their overall rate discounts just aren't as aggressive as what we are seeing elsewhere. The lesson here is that loyalty doesn't always get you the best deal. A Bank of Canada study found that borrowers who don't shop around often pay significantly more. Just because you have a checking account with a bank doesn't mean it's the best place for your mortgage. Moving up the list, we have two very solid contenders, BMO and RBC. For most Canadians, these two banks are a great mix of service, branch access, and competitive rates. First, BMO, the Bank of Montreal. BMO has been very competitive this year, especially for anyone considering a variable rate mortgage. Their variable rates are sharp and they offer a unique feature where your monthly payment can remain fixed even if the prime rate changes. Instead, the amount going to principal versus interest adjusts. This is great for stable budgeting, but be careful. If rates rise too much, you could hit your trigger rate and find yourself paying mostly interest and very little of your loan. Still, it's a strong option. Then there is RBC, the Royal Bank of Canada. As Canada's largest mortgage lender, RBC has the power to be very competitive. They consistently offer some of the best fixed rate mortgages among the big six. And their 120-day rate hold is a fantastic feature for home buyers. Their variable rates are also quite competitive. As the biggest player, they want to win your business, and their pricing usually shows it. You should almost always get a quote from RBC as a baseline. The key takeaway with BMO and RBC is that they are always in the conversation. They provide a great benchmark. When you are shopping for a mortgage, the rates they offer are the ones you should be trying to beat. Hey, we are about to get to our top ranked lenders. If you're finding this breakdown useful, please take a second to hit that like and subscribe button. We release videos like this all the time, breaking down complex money topics to help you make smarter financial decisions. It's free and it's the best way to stay informed. Now, let's get to our top spots. Now, we are in the top tier of the big six banks. In 2025, CIBC and National Bank are standing out by being leaders in very specific and very important categories. First up, CIBC. This year, CIBC has been very aggressive with its discounted fixed rates, particularly for insured mortgages. An insured mortgage is what you get when your down payment is less than 20%. Because the lender is protected by default insurance, they can offer lower rates. CIBC has leaned into this hard. As of late August 2025, their 5-year fixed insured rate was a very low 4.21%, making them a top contender if you are a home buyer with a smaller down payment. Next, we have National Bank. They may be the smallest of the big six, but they have been a leader when it comes to variable mortgage rates. Their discounted variable rates have consistently been among the lowest offered by any major bank. For a borrower who thinks rates are more likely to fall than rise through the rest of 2025, National Bank is making a very strong argument. They are proof that being a bit smaller can make you hungrier and more aggressive on pricing. So if you're looking for an insured fixed rate, CIBC should be one of your first calls. If you're leaning toward a variable rate, National Bank is a clear leader. But hold on, because the number one spot on our list isn't a bank at all. We've ranked the banks, but here is the secret. The best mortgage provider for most Canadians in 2025 isn't a bank, it's a strategy. The number one spot goes to using a mortgage broker to access monoline lenders. What's a monoline lender? It sounds complicated, but it's simple. These are financial institutions that only sell mortgages. You might have heard of names like First National, MCAP, or CMLS Financials. They don't have downtown towers or checking accounts. They don't try to upsell you a credit card. Their entire business is mortgages. Because they are so specialized and have lower overhead costs, they offer two huge advantages. First, their interest rates are often much lower than the big banks. A broker can frequently get you a rate from a monoline lender that's significantly better than the special rate your own bank is offering you. For example, in September 2025, top brokers could offer 5-year fixed insured rates around 3.89%, while the big banks were starting at 4.21% and higher. Second, and this is arguably more important, their mortgage terms are often fairer and more flexible. This all comes down to penalties. Industry statistics show that about 6 out of 10 Canadians break their 5-year mortgage term early for a new job, a new move, a divorce, or to refinance. If you break a fixed rate mortgage with a big bank, the penalty can be massive, sometimes tens of thousands of dollars. Monoline lenders typically use a much fairer and more transparent penalty calculation that can be 3 or 4 times lower than the banks for the exact same situation. So why doesn't everyone use them? Because you can't walk into a monoline lender's branch. They are available almost exclusively through mortgage brokers. A good broker is a licensed professional with access to dozens of lenders, the big banks, credit unions, and these powerful monoline lenders. Their job is to shop the entire market on your behalf to find the best product for you, not just the best rate. Best of all, using a broker costs you nothing. They are paid by the lender you end up choosing. This is the insider's advantage. You get a wider market, better rates, and fairer products, all by having an expert on your team whose only job is to find the best financing. So let's bring it all together. While CIBC is an excellent choice for an insured fixed rate mortgage and National Bank is a leader on variable rates, the undisputed best way to get a mortgage in Canada in 2025 is to work with a licensed mortgage broker. They give you access to the entire market, including monoline lenders that offer not just better rates, but much fairer penalty terms and flexibility that can save you a fortune. Don't just walk into your bank assuming your loyalty will be rewarded. That assumption could cost you thousands. That's why I always tell my clients, talk to a professional who works for you, not for your single bank. Who's your mortgage with? What has your experience been? Let me know in the comments below. I read every comment, and your story could help someone else in this community make a better decision. If you want to see what your options are, let me know, as I have a network of trusted independent mortgage professionals that I recommend. They can give you a personalized analysis and show you exactly how much you might be able to save. Thanks for watching, and I'll see you in the next video.